You're listening to Booked, the bookstore education podcast brought to you by the American Booksellers Association. This week, we're tuning into the three-part financial series presented virtually in 2021, beginning with the Q1 check-in, planning today for a successful year.
Hi, thank you for coming. This is Financial Management for Bookstars, session 1 of three-part sessions from ABA. This session will cover financial series planning for successful 2021. My name is PK Sindwani. I'm the Chief Financial Officer for American Booksellers Association. As most of you know, I was a bookstore owner for 29 years before joining ABA. And during my time, I expanded my store 2 times and had 2 locations for a while.
Hi, I'm Jennifer, and I've been working for nonprofit associations for 15 years, and I've been with ABA for 4.5 years now.
For many stores, 2020 was the most challenging year in decades, and 2021 will present similar challenges, ongoing challenges. This session will focus on this interactive session will help you succeed, focusing on key topics: creating your budget, responding to changing business conditions, and monitoring important benchmarking data to keep track of your progress and see if you can achieve your goals. This session will also have a workshop portion where you can create a template which will help you build your annual budget. Once again, this is a 3-part series. This session will focus on budgeting. The next one will be on Bookkeeping 101, which will be on February 24th. And then the final session will cover Managerial Accounting, which will be on March 4th.
Thank you. What is a budget and why you should have one? A budget is a detailed financial plan for the future, for future expectations. It's an estimation of revenue and expenses over a period of time, usually a calendar year, and it can be reevaluated as needed. If a year sounds overwhelming, I get it. We're busy, we have a lot on our plate, we're just trying to get through. My suggestion is to start with the upcoming season. You can always build on it as you go. And once you have a full year completed, the next year budget will be that much easier. A budget can help you plan for large expenses and help keep those expenses manageable. You should also track expected revenue in your budget and use it to benchmark your success. Having a budget can be an important lifeline. A realistic budget helps make sure you will have enough money for the things you need and that are important. There are plenty of things you can't control in business, but a budget can help you be better prepared when expenses come along that weren't anticipated, like in a pandemic. You can use all the information available to you, what happened in 2019 versus 2020, and any plans you've changed for this year, all to help you create a best guess of how your bookstore will perform financially. Whether the budget is for personal use or for your business, a major advantage of using a budget is it helps you organize your financial goals. It helps shed light on inefficient spending, maybe a particular event or reward program. It helps to direct your revenue in a profitable way. You'll be able to see how much something will cost you and compare it with expected revenue. You can then use that information to adjust your expenses so that you can have more profit. Who wouldn't want that? You will be able to make better financial decisions. You'll gain the confidence of knowing exactly what you're expecting to come in and go out, and where that leaves you. Having that kind of knowledge is a game changer. It's power. When someone comes in and maybe asks if you can help sponsor a local event, maybe it's a readathon, maybe a diversity book bingo, or a book theme March Madness, knowing your budget can help you make a decision more confidently. Once the budget has been established, it serves as a benchmark for evaluating actual results. You can compare your budgeted amounts with actual amounts and see if you are within budget or need to make adjustments for next time that kind of expense occurs. It can help shine light, on great revenue streams too. If something outperformed in bringing in more income than what you expected. If the budget involves other staff members, it also serves as a way of communication of your business goals and objectives for that year. One of the major processes within the bookstore is to coordinate the plans and goals of the business. This is especially important for bookstores that have significant revenue from various store operations. Without preparing a budget, you would not know how much money your bookstore would have for operations each month, and relatedly, how much money the store might expect in revenue or how much might be needed to borrow to cover expenses. The key to any successful budget is consistency. The more consistently you log your expenses, assess your progress towards your financial goals, and look for ways to reduce spending, the more benefit your budget will have.
Thank you for explaining it so nicely, Jennifer. Yes, so what I want to add is basically it's a short-term educated estimate of your revenue and expense. Now, please remember, budget is not same as your business plan. Business plan is a document that you have that spells out your objectives and strategies. And that document is usually needed to start a business when you need funding, or if you need ongoing working capital. But budget is basically a profit and loss statement. So we will go over some of the categories that you will need to keep track of. The first ones are books and book fairs, outside sales, non-books, events, your cafe and bar. Now, a few things I would mention in books is when you're preparing the budget, this is a good time to make sure you separate your books from new books to used books and remainders, because each of those categories have different gross margin. So it is a good time to track to make sure you are in line with the industry standards for all those three categories. Now, as far as new books is concerned, this may also be a good time to take a look at your inventory turnover report, which means if there are sections, are they performing according to what rest of the store is performing or what the industry standards are? And also look at your category summary report, see how your categories are doing per dollar square feet. So for example, in 2020, most bookstores did not have as good a didn't sell as many travel books as they did fiction and cooking sections performed more than travel. So this will be a good time to adjust that and allocate your inventory dollars accordingly. So, and then same thing we'll do next. We will track some expenses. Next slide. Okay. The first expense is cost of goods sold. Cost of goods sold is calculated starting with your opening inventory minus purchases plus your ending minus your ending inventory is your cost of goods sold. Now, I would recommend similarly in cost of goods sold to keep it separate from your new books to used books and remainders. That way you can keep track of gross margins accordingly and make sure they are in par with the industry standard. And similarly, most people, according to Abacus, also deduct their co-op dollars from cost of goods sold, which is fine. I would also recommend keeping them separately so you can keep track of whether you've gotten all the co-op that you're entitled to. Make sure you haven't left anything on the table. This is one of those things that publishers give it to you, but you have to take advantage of it. Now, if you want to know what Abacus is a free annual report that provides detailed information about where your store falls across the range of areas, including profitability, productivity, and financial management. This is available through ABA, and we will pretty soon be rolling this out for year 2019 and 2020. The next important categories to track are your personnel expenses, which the personnel expenses include salary, all benefits, including insurance if you have any, taxes, owner's compensation, all is included in personnel human resource expenses. The next category to keep track of is occupancy, which includes your rent, your utilities, your repairs, and your common area maintenance charges, which includes insurance, not the regular insurance, the insurance that your landlord has charged you for their building. And most of them do it through CAM, common area maintenance expense. Next area to keep track of is marketing and advertising, telephone and internet, any other professional expenses, including legal and accounting services, any office expenses, supplies, travel expenses, which you wish you had last year, but same travel expenses. And next thing to keep track of is your insurance. Now, when I say this insurance is the store insurance, banks and credit card fees, dues and subscription, freight out, any local permits or expenses, WAG of expenses, and other expenses. Now, few things I want to mention on this categories are insurance, for example, is best to make sure you bid it out every year to make sure you're getting the best possible rate. And ABA has a new insurance program. Feel free to compare with your insurance expenses that you're paying right now. Banks and credit card fees are similarly, it's best to check it, bid it out every year, make sure you're getting the best possible rate. Credit card fees are especially important this year because in 2020, most people did not want to touch money, so they usually paid by credit card fees. So most stores have higher credit card fees than usual. Similarly, web expenses, which are expenses for things like indie commerce and any other expense you could think of. Okay, after that, so now the budget in this case takes a form of profit and loss statement. And here are the categories we mentioned: new books, used books, remainders, cafe and bar sales. And here we've combined the cost of goods sales, but it is underneath, it has, make sure you have all those categories separate. And the next is all those categories that I mentioned. Jennifer, next slide. Once again, the owner's compensation, total payroll, which is broken down into all the components of the total payroll expense. And next is your occupancy cost, which is once again broken down to repair, maintenance, utilities, and other expenses. And finally, your other expenses that we mentioned, office expense, travels, insurance, etc., which give you your total operational expenses. And the next slide gives you total expenses and your net operating cost. And in any other income and other expense. Now, when these other incomes are things not related to the operation of the bookstores, such as any airport or licensing fees, the incomes that you get, or any other expense that do not fall in the operational expenses for running a bookstore. Now, once again, as Jennifer mentioned, you can kick it a notch by comparing your data with Abacus, which will tell you how you are doing in each category according to industry standards. But this year, unfortunately, we have to take the Abacus data with a grain of salt because most people had higher cost of sales because most people did more of their buying from wholesalers such as Ingram, and which has tend to have a less cost gross margin. And similarly, the expenses, some of the expenses, COVID-related expenses, were higher. Your repair expense or your COVID-related cleaning expenses were a little higher. So don't beat yourself up if you are higher than 2018 because everybody, unfortunately, was higher on those expenses. So once again, the point of having a budget is to see where you're going and how you will get there and keep track of your progress along the way. Keep adjusting it, changing it to a forecast so you can plan for any cutbacks or any improvements if they're needed along the way. Now, today we focused on the actual P&L budget. This, of course, is different than the cash budget, which is we will cover under our third session on March 4th under managerial accounting called cash flow statement. Similarly, cash flow, which we do have it on the web worksheet that we have on bookweb.org, is not the same as your bottom line because you obviously have things that were not paid during the year or sales that you made to schools that were not paid for till next year. So, and this budget is calculated on base of accrual accounting instead of cash accounting. And just give you a quick definition of accrual accounting. In accrual accounting, revenue is recognized at the same time as expense. In other words, let's say if you had a sale in February to a school, which won't pay for it till March, and you bought the books in February, supplied it to them, but you won't pay for those books till April. In accrual accounting, you will recognize the income and the expenses in the month of February. But in case of cash accounting, you will recognize the income in March when you got paid, but the expense in April when you actually pay for those books. So as you will see, you will have a income in March and higher profit in March and a loss in April. So the best way to keep track of businesses, those of us who have inventory in businesses like bookstores, so the best way to keep track of is to do accrual accounting. Thank you.
And we have a few questions. First question is sales tax. Where would they enter sales tax on this budget worksheet?
So the sales tax is a non-profit and loss statement. So that is calculated on the cash portion of your sales tax. It's a good question, um, because sales tax basically is in and out. So you actually are, it doesn't figure into this because you're collecting it from the customer and you are sending it to the government. Therefore, I just left that out of the equation because it really is your it's in and out, and I did not want anybody to spend that money because you owe the government. And most states give you a little break if you pay sales tax on time. For example, I know in state of Pennsylvania, if you pay your sales tax, you get $25 break by paying it on time. That income, I put it in other income, but the sales tax is basically in and out. That's why it's not in this P&L budget.
Okay. The next question is, where would they put event expenses, such as a platform payment?
So there's a separate subcategory in cost of sales that would where the event expenses will go, but keep it separate from your cost of sales for books.
Okay. And can you discuss the percent used in the spreadsheet and how they are determined?
Yes. So this is a good question. The percentage was determined based on 2018 Abacus data. This is what average bookstore had. For example, average bookstore made 46% in gross margin. Payroll cost was 24%. All of these numbers were derived from Abacus data. Now, if anybody has any questions on the so here I have aggregated everything in categories based on how it was shown on Abacus. But in subcategory, for example, cost of goods sold, there are subcategories. That's where all you will have separate side worksheet where you will calculate your new costs, old, used, everything, and then lump it together in cost of sales. So many of these categories will have subcategories. And feel free to email me if you have any questions about that.
You ready for the next question?
Yep.
Okay. Where do people track expenses related to internet subscriptions like Constant Contact, Stamps.com, indie commerce fees, etc.?
There's a category called web expense. That's where I would track all the internet, all those web expense kind of expenses, which is separate than your internet, which I would track it in telecommunication, but all the indie commerce, stamps.com, all the related fees, I would put it in there. Actually, stamps.com, for example, I would put it in with postage because basically you are saving on postage. So I would lump it with postage.
That makes sense. Next question. Is there a better model, cash or accrual, for beginning bookstore?
I would still recommend accrual accounting even for beginning bookstores because you are going to have an inventory at the end of the day. It is better to stick, even though most businesses do use cash, small businesses use cash accounting, but in our business, it is better to use accrual accounting. That way you can keep track of see if you made a profit and keep adjusting it accordingly. So accrual accounting is a better method for those of us whose businesses involve inventory.
Okay. Next question. Is there a model for tracking cost of goods sold versus cost of goods purchased? I wonder how margin is calculated for return penalties, for instance.
That's great question. So for example, if you return, for example, penalty, the only person I know of that charges penalty restocking fee are the wholesalers. So that when you get credit is usually subtracted from your invoices. So it's figured into your cost of goods sold and put it in new book sold, not the used, because cost return is only associated with new books. Now, the other thing I would mention is freight out. That's why I have separated freight out as well, because that's also part of your cost of goods sold. Uh, the books that you're returning through is also adds up to your cost of goods sold. Just to keep track of how much you're returning, and maybe you can adjust if you're returning too much, you can adjust your buying accordingly. Compare your freight out to Abacus to make sure that you're in line with the industry standards of how much you're returning. Now, of course, 2020 will be different because we did a lot more returns this year than any other years. Many stores were not able to open for years, so they were not able to do the return. They were not able to for many months, so they were not able to return, not able to sell many of the new releases. They ended up returning it. So freight out, in my opinion, should also be calculated in cost of goods sold as a whole to figure out what exact cost of goods sold. Now, the other thing to keep an eye on this is um, many people did not, many stores were, because they were not open, they did not have as good a non-book item sales as they did in previous years. A lot of those things like your puzzles and games, etc., a lot of them are impulse buys, and many websites were not prepared to show them or your bookmarks, etc., to prepare to show them. And the websites, and besides, most of these items people pick up as they're leaving the stores, so that affected cost of goods sold. Those items tend to be high price items. So in fact, you may have in some cases better sale but lower bottom line because of all of those things. So don't worry, this is an unusual year, but pretty soon we will have a data to compare how everybody did during COVID.
Okay. Can you switch back and forth between cash and accrual methods?
Not during the year. I believe you can once the year is complete, but that's something I would double check with your accountant. Jennifer, do you know? To my best of my knowledge, you can. It can be different every year.
It can be different every year, but you should pick one and stick to it for the year. Otherwise, it can get really confusing.
Yes. Yeah. You can maybe change after a year, but please feel free to please check with your CPA, because I'm not sure what are the tax ramifications on that.
Okay. Next question. Any special advice on pre-order money taken in and when it's spent, title released? We now have more pre-orders and prepaid special orders, and it's throwing our numbers a bit.
Yes.
And that question's from Jamie.
Jamie, that's a good question. Now, I know a lot of POS systems are still adjusting to that fact. It is, I would not recognize that revenue, pre-order revenue, until the month book is released, because it is confusing. You get the revenue ahead of time, but it's not really a revenue. That throws off the cost of goods sold. In my store, I used to put it on my POS as a gift card just until the day of the sale, and then I would recognize that revenue. Now, that is good for two reasons. One, in bestseller reporting, A lot of the POS, unless they've changed recently, which I hope they have, the POS is not sophisticated enough to recognize that sale on the day the books gets on sale. And I know many publishers get confused because when they see a particular book on the bestseller report, when they haven't released the data yet, or haven't released the book on sale date is not here yet, they wonder, why is this book selling why is this store selling before time? So the best thing to do is treat that revenue as a prepaid sales instead of revenue, which is then a balance sheet item. It does not hit your revenue till the day of the sale. And similarly, you will get the expense when you get the book. It will both hit the same month.
Okay, a couple of more questions. If you have a cafe and bookstore combo, should you use accrual accounting for both? And should the parts of business be tracked separately?
Definitely tracked separately. From somebody who had a cafe and then switched to wine bar, I know the cost of the profit margin is much higher on cafes and bars. Similarly, the payroll cost is also, I'm sorry, cost of good is much lower and profit margin is higher, but similarly, payroll costs are much higher than your bookstore. So it is best to keep track of it separately. Now, yes, you can do, because cafes don't tend to have too much inventory. You can, it goes bad pretty quickly. So yes, you can use cash accounting for your cafe and not do the same for your bookstores. That you can do.
Okay. Regarding owner compensation, if you're an LLC, then anything going to an owner is equity payout. Would you still put it on the P&L?
That's a great question. So many owners take salary and owner's compensation, and some just take owner's draw. Now, for example, just to keep track how the store is performing, for example, if you're working in a store as a buyer, many store owners will give themselves a salary, average salary of a buyer, and then if they have to withdraw any additional money, they would do it through owner's draw. So the portion that you paid yourself as a compensation, for which you have to pay social security tax as an employer and as an employee, that portion of your total compensation will go in owner's compensation, which is a profit and loss item, and the owner additional draw, which reduces your equity, goes under reduction of equity in your capital portion of the owner's equity portion of the balance sheet.
Okay. Next question. Can we talk more about inventory in regards to accrual accounting? At the end of the year, we did a full count of physical inventory and updated our POS to reflect what's on the shelves. Though my accountant is asking me for the value of only the inventory that's been paid for, so nothing that I bought November to December that's not due until 2021. What's the best way to calculate end of year inventory?
Wow. I think your accountant is using cash accounting method, because your ending inventory reflects everything you received in the month of November and December. I would go back to your accountant and make sure that he or she understands that it is the actual inventory reflects those 2 months. Now, you could do this is by taking all the invoices, accounts payable for the month of November and December, and deducting it from your ending inventory. But it is a little confusing So I think you and your accountant may not be on the same page. Please check with your accountant. But there is definitely a way to keep track of it. It's just to subtract all your November and December inventory uh, purchases from your ending inventory. Now, it's good to take ending count your inventory at the end of the year. Most POS systems do give you the inventory, but of course there's always theft, so it's not the best and the most reliable way to get your ending inventory. So best thing is to, yes, take your physical inventory and adjust your POS system.
Okay. Next question. How do you recommend accounting for a frequent buyer's coupon, such as you get a coupon for $10 off every $150 you spend?
I used to have a separate category for sales discount. In this worksheet, I have deducted it from the sales. That's what we do in the end for a tax account for tax return. But yes, it's a good idea to keep track of that separately as a return, as a incentive, and to make sure that you are not giving the house away. They are in line with industry standards. Keep it as a separate line. And I know most POS systems are capable of keeping it separate. In the end, you still deduct it from your revenue, but good idea to keep it separate.
Okay, so how do I compare my performance with Abacus? And there was a question about Abacus, and I lost it. But it was about whether it's going forward for 2020 or 2021.
Yes, it is. Yes, it is. You will be hearing from maybe pretty soon. Actually, in month of April, if I remember that correctly. Um, we will be collecting data, yes, and we will be collecting data for 2019 and 2020, and you will have a report. That way you can compare your COVID year. Hopefully you'll never have to repeat those again, but you can compare with how other bookstores did. um, this we skipped 2019 because it was beginning of COVID time, and most people didn't have the bandwidth to deal with Abacus because they were still trying to figure out how to run their store. So we skipped it for 1 year. But yes, it will be available again. And if you participate in Abacus, you will get a free report. And the report will outline, you will get two sets of reports. One report will outline what the industry did, and then you will get your individual report card, basically how you performed on each and every different categories as compared to the industry.
Okay, so the next question is if ABA's suggested chart of account is still relevant and if there's any plans to update it.
Oh,
I'm not sure when it was last updated, but we can look into it and see if there are and send that out.
Yes, actually, I did not know that ABA had a recommended chart accounts, which I will definitely take a look at and upgrade any subcategories. For example, all those in this worksheet, I have combined just to for sake of saving time, we've combined all the subcategories, especially from cost of goods sold, sales discounts, etc. So I will take a look at it and add all subcategories that we've come across with, and we'll update it and make it available on bookweb.org pretty soon. I'm sorry, I was not aware of that there was such a thing.
Yeah, we'll definitely look into it and update it as needed and get that communication out. So, PK, are budgets really rigid or can they be flexible?
Oh yes, they can be flexible. So that's the portion where we call it forecasting. So yes, it's a great idea to have a budget, annual budget, but then keep reviewing it every month, update it to your actuals, and if things are not going according to the plan, it's best thing to keep updating it and keep revising it. And definitely, there are times where you can't control it. Let's say if your computer crashes, which Jennifer knows very well, those are things that you didn't plan for. So sometimes you have to update, and so it's the best thing to keep updating it every month.
Right. So should we talk about the difference between a budget and maybe a business plan?
Yes. Business plan, most of you, if you already have a store, you had to do that to get funding. Business plan is a document that lists your goals and strategies, which helps in obtaining funding. The budget is basically a educated guess of your forecast, your P&L. And in business plan, you also need business plan if you need ongoing support for working capital. Talk about the strategies, what you're going to do in case your sales are not where they're supposed to be, or you have too much expenses in one area or another. Your detailed plan of how you would address that is on your business plan.
Okay, should I have more than one scenario on my budget?
Yes. I mean, if you can, I mean, that's a great idea. In my opinion, be conservative on everything. Be conservative on sales. Be conservative on, not conservative on expenses, but be conservative, because it's best to plan for the worst and hope for the best. So keep adjusting it. If your sales are better, you can adjust it at the same time. So you can think about expanding, maybe adding more dollars to your inventory, etc. So it's best thing to keep adjusting it. I'm sorry, did I answer that question? Was that?
Yes.
Thank you.
Should we talk about the next sessions?
Yes, sure. The next session is bookkeeping 101. Now, bookkeeping is where it starts. It's all the entries. Every time every time an accounting event happens, let's say somebody buys a book in your store, or you purchase book from a vendor, all of the moment it happens, you record it through a thing called journal entry. So bookkeeping is where it starts. You enter all your invoices, and how it then goes to general ledger, which then is consolidated into trial balance. And then from there, you get your profit and loss statements, balance sheet, cash flow statements. It all starts with bookkeeping. It's basically garbage in, garbage out. All the information that you put in your accounting system then filters into all those documents to give you financial statements, which help you make decisions along that. So we will get into the nuts and bolts of bookkeeping, basic accounting.
Right, which will lead into managerial accounting, which is the more advanced level.
Yes.
Once you have the basics of bookkeeping and your budget, you can start really applying the information that you have in your balance sheets, income statements, cash flow statements, and even, take a look at the Abacus report, and dissect information that way as well.
Okay.
There's another question. Still wondering if anyone has a good way to track or budget their front list and back list ordering.
Yes. In one of the cash flow sessions, and I think the document is available on bookweb.org, and I can make sure it is. We do plan our backlist and front list buying accordingly. You have take a historical data of how much of backlist that you did, how much of front listing you did, and that you can keep track of either from your POS system or from Edelweiss. That will tell you how much did you buy in front list. As a matter of fact, it's a great idea to keep track of it and separate it by month. So, for example, I know in the up until last year, salespeople from each and every publishing companies used to come every season 2 or 3 times a year, and we would buy books for the whole season. And then from there, you enter it in your POS system, which also POS system also gives you, so it tells you how much you bought from different publishing company, when it will be released, and how much of the each purchases will be released different months. So, for example, if you sat down with the publisher in August and you bought books for September, October, for October, November, December, it will tell you how much you bought for the whole 3 months in new releases, how much of that was October, how much of that was November, and how much of that was December. That would give you an idea of what you how much you will be getting in inventory, how much you will be spending each month. The difference. So, for example, if you are if you're expecting $10,000 in sales and you've already spent 3,000, so you have about 6,000 available to spend for books, and you've already spent $3,000 in front list buying, that is your clue that you can only do 3,000 in backlist buying. So it is good to plan for those buys based on your previous history, based on your inventory level, and what your percentage it was a year before, and do your backlist buying accordingly, so your cash flow is you can so it should reflect your cash flow. Now, remember, on this worksheet, I made every month sales the same because each region is different. Some bookstores will have more sales in summertime than they would in months like January, February, or March. I know it's snowing in my town, so nobody can get out. So each sales is different. So please don't go by what it says. Take a look at your historical data and allocate percentages accordingly. I know everybody does much better Christmas time, but rest of the year, each month is different. So it's best to, each store can allocate according to their own previous history. And if you don't have previous history, maybe we can come give you some historical data countrywide, but usually it's best to get a regional data of what the different breakdown between each month is. For example, Florida won't have any problem in January, but in East Coast, their usually sales are down in January and February. People are still catching up from Christmas.
Yep. And this worksheet should just, maybe be a starting point. You don't have to, go by every single and try to fill every single line. adjust it, change it to what you need. Or like I said before, if you can't do a whole year, like sit down and do a whole year. Just try to do the upcoming season and see what happened last season, last year at that time, so that it can help you prepare the budget, so that it can help you know where you stand, what's coming in, what's going out.
Yeah, and feel
Yeah.
free to insert the lines too, where, for example, if you have some things that are not in there that are, especially for your store, they're not mentioned in here. Feel free to add a line, and don't forget every line items. There are many things such as cost of goods sold, sales. They have many subcategories. The best thing to do is keep track of each and every subcategories to make sure the sections, the categories are performing how they are supposed to. For example, you may think you're doing great selling used books, but unless you keep track of it separately and realize, oh, maybe they're not performing as well as you thought they should, maybe you're better off than taking that inventory dollars and spending it on new books, or maybe same thing as remainder. Let's say if you're selling remainders and your cost of goods sold is not as good as the industry standard, then either you need to think about your pricing model, or maybe your market is not, for remainders, is not what it is for rest of the country, or different parts of the country is different. I used to have in my store, remainders did well, but the used books did not. So remainders were in. So each section, each store is different. Tweak it according to your store.
Okay. So I think we have time for one last question.
Mm-hmm.
Any suggestions on how to implement a budget for buying new books? Having a monthly average number isn't that helpful because we don't do the buys on a regular monthly basis, and they get charged to us over the course of several upcoming months. Plus, there are huge seasonal variations, not like rent or salary, where we know from month to month if we're on target.
That is true. That is true that each month is different. If I understand the question properly, if you are buying it monthly, and yes, you'll probably have to buy more during this time of December, but if you on your budget, your sales are allocated accordingly, so is your cost of goods. So for the month of December, if you are buying more, you should have more sales as well. And also, once you sit down with the rep, enter what you bought in your point of sale system, which can then give you a report that tells you, okay, from, let's say, from Simon and Schuster, you bought, if I understand Nina's question properly, say for example, from Simon and Schuster, you bought $10,000 worth of books in the whole season. Your system can tell you how much of that will be coming each different month. Compare it with your sales and see how much is left for your backlist buying, and adjust it accordingly. Yes, and there are of course there are always last minute surprises. Let's say Obama announced in October that he's coming out with a book in November. Now, it's something you hadn't planned for it before, but you have to do it. So budget should be somewhat flexible, so you can have plan for contingency like that. And the other thing you can do is talk to your talk to the publishers, talk to the vendors, see if you can work out some kind of payment plan or extended dating for unexpected purchases that you had to do because you wanted to make sure you don't run out of particular book. So therefore you had to buy extra. So things like that. I would also take the additional step of talking to your sales rep, talking to your credit rep. Make sure you are you're letting them know what things you're facing, so you have a positive cash flow. I hope that. And Nina, please feel free to email me if I haven't answered your question. I hope I answered it.
And if anyone else has any questions that they think of maybe now or later, at any time, feel free to email us. PK's email is pk@bookweb.org, and mine is jennifer@bookweb.org. And please check us out, the series part 2, Bookkeeping 101, on next Wednesday, February 24th at 3 o'clock Eastern Time. And Financial Series part 3, Managerial Accounting, on Thursday, March 4th at 3 o'clock Eastern Time.
Yeah.
I hope this was helpful.
Yes, I hope it was helpful. Jennifer, thank you so much for helping me.
Thank you for having me.
Yes.
Enjoy the rest of the Institute.
Thank you.
Thank you for listening to Booked, the bookstore education podcast brought to you by the American Booksellers Association. Don't forget to subscribe to the show on your favorite podcast app. Additional educational resources can always be found on the ABA website at www.bookweb.org. Happy reading!